the Forex market never stops. While traders in London and New York sleep, the Tokyo session is already running, and if you ignore it, you are ignoring the first major move of every trading day. The Tokyo session opens at midnight GMT and closes at 9 in the morning GMT. Traders often call it the Asian session because activity from Sydney and other regional centers is already building before Tokyo comes online. Japan is one of the world's largest exporters, and its currency, the yen, moves significant volume every single day. The pairs to watch during this session are the ones tied to the Asia-Pacific region. USD JPY, EUR JPY, GBP JPY, and AUD JPY tend to see the most movement. The Australian dollar and New Zealand dollar also see elevated activity, especially when economic data from those countries drops during or just before the session opens. Pairs like EBP or EUR CHF, on the other hand, often sit quiet during Tokyo hours. Thinner liquidity means tighter, less decisive movement in those pairs. That lower liquidity is actually one of the defining characteristics of this session. Tokyo tends to produce range-bound price action rather than strong trends. Prices move between a ceiling and a floor, what traders call resistance and support, and they bounce back and forth within that zone. This makes breakout strategies harder to run and range trading approaches more appropriate for many traders. There are exceptions. When the Bank of Japan releases an interest rate decision, or when Japan's inflation figures land well above or below expectations, yen pairs can spike sharply and quickly. The Reserve Bank of Australia and the Reserve Bank of New Zealand also issue decisions during or around these hours, which can drive hard moves in AUD and NZD pairs. An economic calendar is not optional here. It is essential. One thing professional traders watch closely is where Tokyo sets its session highs and lows. When London opens and European liquidity floods in, price often breaks beyond those Asian session boundaries. Some traders specifically look for that breakout as their entry signal. It is a well-known approach, but like every strategy, it carries real risk and demands proper risk management on every single trade. If the Tokyo session falls in the middle of the night for you, that is worth taking seriously. Fatigue affects decision-making, and no trading session is worth losing sleep over in the literal sense. Specializing in Tokyo is a valid choice, but so is studying it and saving your live trading for sessions that fit your schedule. Here is the practical takeaway. Before the Tokyo session opens, mark your key support and resistance levels. Check the economic calendar for Japan, Australia, and New Zealand, and decide in advance where your stop loss sits. Entering a trade without a defined exit is where most of the damage gets done.